Welcome to another video. And in this video, we're going to just quickly go over, and I'm going to provide an update to our ARK ETF portfolio. Now, you'll remember that this portfolio was designed to track the whole of all of ARK's 6 ETFs that they have out there. That's ARKQ, ARKG, ARKW, ARKK, ARKF, ARKX, and then of course there's an allocation of BLOK ETF, which provides cryptocurrency exposure. All right, so where are we now? So far the account, when it was funded, it had $1,000, and that was a month ago. And since then, I've made 2 $125 deposits at payday time. So with payday having happened just 2 days ago, here is where we are. Now you'll remember that the goal was to have 90% ARK exposure with 10% of the portfolio set for the BLOK. And in order for that to occur, I want to say that we said that each ETF should be 16%, because 16 times 6 is going, nope, that's not right. So actually, no, 15%, sorry. So 15 times 6 is 90. And then we have BLOK sitting there with 10%. So you can see the portfolio is more or less balanced. Okay, but it looks like there's some areas, obviously, that needs to be shored up since the deposit was just made. So I'll be making those tweaks in the near future. I'll be setting those orders to be filled today. All right, so let's go ahead and take a closer look at the performance, right? So the performance of our individual ETFs, you'll see that starting with ARK Fintech Innovation, you see that that one is down 13%, and then you have ARK Genomic, which is going to be down 9%. ARK Innovations down 7.7. ARK Autonomous Technology is going to be down 9. We have ARK Next Generation Internet that's down close to almost 11. And then ARKX Space Exploration is 11. And last but not least, we have the BLOK ETF, which is down 13.5%. So a lot of red, and what's interesting is that this is actually a lot of red in a short period of time. So the market is moving not only downward, it's moving downward aggressively, which actually makes sense because, as you've probably heard me say a million times, when the stock market's moving up, it's a staircase, right? It staircases up, stairs up, and then elevator down. And right now we're definitely seeing an elevator down to be down this, high of a percent in less than a month's time, right? These are big moves. All right, so overall, the portfolio is down 10.28% or $100. So I'll go ahead and dig right into the charts. And actually, when I dig in, I want to talk about diversification quickly, because as I was pulling these charts up, it was something I kind of laughed to myself, in this ETF experiment, because when you look at this chart, this is ARKK, this is their flagship fund, you'll see that it's been just dropping, and there's nothing in this chart that shows strength, no higher high, no higher low, right? It's literally just falling off of a cliff and continues to. Making the move from over $120 to less than 40, it's down 71%. So this is just a massive move down. And what's interesting is when you look at the remaining ARK funds, they follow a similar pattern. This is the autonomous technology, and this one's down 45%. So it's down less on a percentage basis, so not as fast moving, if you will, or not as volatile, but you can still see that decline is there. Now you look at this chart, and this one really looks like ARKK, right? It's really, there you go, 69% down from the 52-week high. Okay. There's ARKW, Next Generation Internet, down 70%. And of course, these ARK funds, they have a heavy concentration in technology. So you can see then it only makes sense that they would be down as technology is down. Here you have space exploration. This one's down 37%. So again, it's down, just not to the same extent, because it's oddly specific, being space exploration as opposed to just general technology. And then, of course, we have our ARK Fintech Innovation. This is going to be your tech-heavy finance companies, down 72%. It's going to be your PayPal, your Square, your different things like that have to do with transactions. And yeah, there you go. So what's interesting, let me just icing on the cake with BLOK, same idea. This one's down 71%. So what's interesting is when we see these charts that repeat themselves, that's where diversification is really important. Because right now, this entire portfolio, although diversified in name, and honestly, even diversified in theme, right? Because genomics is not the same as space, is not the same as fintech, is not the same as Internet of Things. Although diversified in that way, the commonality, though, is that they're all in the technology space. And right now, as technology and anything related to technology is taking a beating, then obviously these ETFs are going to suffer as well. And to be fair, it's not just technology. It really is the stock market across the board. I think everything but energy is actually, been on the downside. But in terms of, say, asset management, or in terms of, risk management, I should say, being heavily concentrated in these positions, it's going to cause you a lot of pain because you're literally invested in the same thing, even though they're under different names, right? So I think if you're going in this direction, just think about how you're diversified. If you're in PayPal, Facebook, Amazon, and a few other companies that are all around the tech, space, that would be similar to being in Ford, GM. I guess you could maybe throw in Tesla. You end up with pretty much the exact same thing. Tesla probably wouldn't fit in there, but you get the idea. You end up with the exact same thing. So when the sector goes up, they go up. When the sector goes down, they go down. So if you're thinking diversification, then that's where you could look to either diversify on an individual basis in terms of the stock selection, maybe by sector, or you can invest in an ETF fund, which is going to give you that diversification without you having to chase or look for it, right? Because that's the purpose of the ETF funds. All right, so with that being said, I know this was just supposed to be a quick update, and that's what I'm going to keep it at, just a few minutes, and say that I hope that everybody is able to survive and survive the stock market, that is, in these times. And, best of luck to you as you take a look at your portfolio. Hopefully you're having the same conversations around diversification, or maybe tweaks, or, things that you might need to do to better position yourself to continue to stay solvent and stay in these markets, especially during these times. Hope everybody has a great long 3-day weekend with the celebration of Juneteenth on Sunday. And as always, this is Dr. Diffins signing off. Bye-bye.